Hi, so today we're going to be talking about what's coming next. So, if you've been thinking about buying a business, I suppose ultimately might not have been a better time than there is right now. So, today Paul's going to break down about some of the big shifts that are happening in 2025 and beyond. So, that's retiring business owners, distressed businesses, and why probably the next 2 to 3 years might be sort of a once in a generational opportunity to actually get into buying businesses. So, Paul, you've been doing deals now for over a decade. What would you say feels different from, when you first started out in this to what you're seeing in the marketplace right now?
Yeah, so I think there's so I think firstly I think there's a huge opportunity. I'm not saying that there wasn't an opportunity when I first started doing this, but certainly the opportunities increased. I think around about 50% of small businesses are owned by business owners over the age of 55, and the vast majority of them don't have a clear route to exit. Their kids don't want to buy it because they probably see how hard their parents work in the family business, and they're probably more interested in making money on something like YouTube or Instagram. Generally, they're not big enough to be on the radar of private equity, who generally don't get out of bed for less than 100 million. So that gives sort of opportunities to people like me and you to go out and acquire those businesses. I mean, I think the stats are something like in the US, 10,000 small businesses are closing down every day because a business owner has to sell, but they just don't have an exit. So when I say have to sell, maybe there's a real pressing need, maybe they have a health issue and they just haven't been able to, sell it. So their only option is to close it down. So many business owners wanting to retire don't have a succession plan. Some would rather sell really rather than have to shut it down. And this does create high quality, profitable businesses, that you can acquire for very little money, up front. You can self-finance these types of transactions. It's really about creating a win-win scenario for sellers to get their exit and to capitalize on probably in most cases their life's work. And yeah, it's really about sort of, I suppose, tapping into that off market opportunity rather than maybe people have actually proactively done something about selling their business and put it up for sale with a broker, for example, because they tend to set false expectations on valuation and stuff. So yeah, our job is to go and find those off-market opportunities, those motivated sellers, and I just think that is far more apparent now in the markets we're operating in than maybe we saw 10 years ago.
So, are you finding that there are any specific sectors or types of businesses that maybe have more opportunity than others?
Yes, I mean, if I were to say, I mean, there's many opportunities in many different industries. For me personally, we focus very much on the leverage buyout. So, we're looking for long established, well run, profitable companies. We've done deals, I think, now in 32 different industries. So, back in the day, we did a startup in the recruitment space. So our first deals were sort of in that recruitment arena because we felt really comfortable with it. But now, obviously, we've done deals in many different sectors. For example, engineering. I'm not an engineer, but we've bought several engineering companies. So I think for us, we're looking for opportunities where we can find those long established companies with a capable management team in place and to deploy the leverage buyout model. I mean, it is a bit of a myth that they have to be industrial businesses with expensive plant and machinery that you can borrow against. Actually this model works really well in any sort of B2B service sector. Take recruitment for example. Most recruitment businesses don't really have any assets other than maybe their trade receivables. So potentially you can leverage those, and that's a way of getting the deal done. But yeah, we're seeing lots of opportunities in most B2B service sectors like recruitment and facilities management, those types of companies. I think engineering in places like the US, the UK, and Australia are multi-billion-dollar industries with many small and medium-sized firms that potentially have a baby boomer owner. And then you've got, if you look at sort of, the trending industries, there's a lot happening in like renewables, energy, anything related to medical or healthcare. So, care homes, for example, regardless of whether we're in, the peak of a market or a bad downturn, the aging population worldwide is a constant demand for those sorts of services. So yeah, there's tons of opportunities in those sorts of spaces. And if you can acquire these and put maybe several companies in the same space together, there are big acquirers out there that are interested in buying larger groups that, for them, a standalone SME in a particular sector might not be big enough for their interest, but a group of 5 or 6 companies does make more sense to them. Certainly in recruitment, there's a lot of private equity backed recruitment groups that are under pressure to deliver returns for shareholders, and the quick way for them to do that is to make big acquisitions. So yeah, we're always looking at not just where the opportunities are, but also where if we end up doing this and putting a group together, that we can actually sell it because there are acquirers out there.
Okay. The one thing a lot of people seem to contact to, I suppose, really try to understand is traditional financing, having a bit of a breakdown of it. So I think banks are very much tightening up. If you think about the changes in the last 5 years since COVID, how is it affecting the way that deals are getting done, and how can smart buyers take advantage of the current climate?
Yeah, I mean, I would definitely say in some of the markets that we operate in, there has been a huge shift, particularly in the last 12 months, with the lenders that previously may have been flexible, or being a lot more cautious, and I guess that's born out of the fact that, look, the SME space has always been high risk. A lot of goodwill tends to be tied up in the business owner. It's their relationship with staff, customers, suppliers. So if they're selling the business and moving on to retirement, somebody's taking over from them, a new buyer. Even if they've got a very good track record in that particular industry, they don't have a track record of running that specific business, and you can't underestimate the amount of goodwill tied up in relationships, particularly with key people in businesses. And from a bank's perspective, they see that as hugely risky. So most tier one banks will really only lend to long established profitable companies with existing management, rather than somebody new coming in. And a lot of the lending is typically reserved for larger businesses. Of course, there are asset based lenders that will do these types of leveraged buyouts, but because the high risk, of course, it's very expensive. So really, it's about sometimes being creative. So for example, you wanted to do a deal, but you didn't actually want to leverage the assets. You didn't want to borrow any money to do the deal from an external financial institution. One way to be creative could be for the seller to do a seller finance deal. So look, most business owners, they've probably spent 20, 30 years building their business. Over that time, they've probably created, enough wealth for themselves. They've earned a good living. They've got a nice house, a nice car. They've got money in the bank. So I'm not saying that they're going to give away their business, but, if there is a pressing motivation for them to sell and there isn't a queue of buyers looking to acquire, well, you coming along and getting creative and offering them their exit, so they get their retirement, they go and get to sort out their health issues or whatever those issues are that are causing them the need to sell, then you can position seller financing. Look, this gets you your exit, which is what you want. Yes, you're not getting all of your money at closing. You're going to have to be paid out of the future cash flows of the business, but you can sweeten that with a coupon interest. So they can create a passive income. And look, if they were, let's say they were looking to sell the business, and maybe their plans for the proceeds of the sale was to invest it. Let's say they were going to do some buy to let investments. Well, if they go and deploy it into property, they've got to deal with an ever increasing regulated industry. They've got to deal with managing agents. They've got to deal with moaning tenants. And in if somewhere like the UK, buy to let returns are pretty poor. You're looking at like 5% if you're lucky. So actually, you coming along and saying, well, hey, I can pay you a monthly interest on the amount that I'm effectively borrowing from you. You sell me your business, I'll pay you out of the future cash flows, and I'll pay you 8%, 10% even. So they create that same passive income, and they don't have all the hassle of having to deal with like tenants and agents and all the stresses that come with that. Now, obviously, it's easier said than done. You've got to convince them that you're going to do a good job running their business, and that their capital is safe, and that you're going to pay them when you say you're going to pay them. And a lot of that is based on track record and what you've done before, as well as obviously having the rapport that creates that trust, with the seller. So possibly, if you don't have any of those things, well, uh, credibility and track records are traded every day. Partnering with people that have done that, been there, and then you position yourself more as a facilitator. So you've got the deal, you've got the seller, you've got somebody else that's got the track record and the experience. We'll bring those two things together, and you've got potential then to convince the seller that this is the way to do it. Particularly in the SME space, you really don't get much competition from big buyers. They're really looking for larger acquisition opportunities, and yeah, that's sort of how maybe that one example of getting creative. There's also structures. So like in the UK, for example, it's not uncommon for a business owner to take out what they need. They pay themselves a reasonable dividend every year, but if they're generating bigger profits than what they need to support their lifestyle, then maybe those profits will be retained in the company, because if they took them out, they'd be clobbered with tax. Well, actually structuring a deal where you pay that cash out as part of the transaction could mean that they could benefit from capital gains tax rates instead of income tax rates, which would be, on £1 million worth of cash, would save them six figures in tax if it was structured in the right way. So there's tons of sort of creative ways that this is sort of what we do. And when we work with joint venture partners, we have our program Buy Build Sell, where we sort of teach all of this stuff to people so that they can go out and do deals like this, and use those creative structures and understand how to position those structures so that they get business owners to ultimately do a deal. So yeah, I think there is definitely a shift to moving more towards being more creative, to get these deals done. But yeah, tons of opportunity.
If you're interested in mergers and acquisitions, we have a free to join community of deal makers around the world where we share knowledge, expertise, deals, and joint ventures. I produce regular content there, and it's the first place that you can see it. So if you'd like to find out more about this and how we can joint venture together, I guess the vast majority of deals that we have done have been with joint venture partners. And I guess to get to 100 plus deals, there's only so many hours in the day. So by sharing the work with like-minded others, we can increase that bandwidth. So to learn more about this and to join our community, visit buybuildsellprogram.com.
So one of the things you do teach is roll-ups and strategic acquisitions. So do you want to just talk about what they are and why do they matter to everyday business sort of buyers?
Yeah, so look, I mean, SMEs are high risk. Most startups fail in the first 5 years, and only 1% ever make it to 1 million of revenue. So the chances of success are slim. But when you get there, it's tough. The things that keeps a business owner awake at night most of the time is cash flow, is marketing, is recruitment. They need to hire great people. They need to keep hold of those great people. They need to do better marketing to encourage more customers and revenue to come through the front door. And they need to manage all of that revenue and cash flow. And they're the things that, challenge most businesses, even the most successful. So, one way to alleviate that sort of stress, that's from pressure of sort of running a standalone business, would be to actually roll up and put several companies together. So, if you've got 5 companies, let's say you go and buy a competitor, let's say you go and buy a customer, let's say you go and buy something in your supply chain, you then control more of the supply chain. You then have a route to distribution of selling your product, and you also buy up more market share by buying a competitor. And there will be duplications in those businesses. They might have duplicated head office functions, for example. Each one might have a finance department or a HR department. Well, do you need 4 or 5 of those departments, or could there be some degree of consolidation? Could there be cross-selling opportunities? And all of those things unlock quite significant value. And sometimes 2 add 2 can equal 6 and not 4 by putting those companies together. And then when you actually build these groups and look to sell, the same principles apply from a risk perspective. Is that if you've got 5 companies in a group, and let's say one of them has a really bad year next year, well, you've still got 4 others that are performing, are profitable, that are growing. So it sort of hedges your risk somewhat, and investors see that, private equity see that, and that's why there's much more traction in larger groups. That there's a lot of M&A activity in sort of larger groups within the sort of industries that we're operating in. And I guess the reason they attract a larger multiple is because that risk is mitigated somewhat. And this is really becoming a very hot strategy in fragmented industries. So think, cleaning companies, for example, trades, digital marketing agencies, for example. We're doing roll-ups in all of those spaces. So it's really about finding that initial platform. Maybe that industry is something relevant to your past, your experience. Maybe you own a business there already. Maybe you have worked in that industry. Maybe you've got contacts. Maybe you're passionate. You're going to feel far more comfortable doing deals with something you know than something that you don't. So the idea would be to find a platform and then go and make tactical and strategic acquisitions. And that's exactly our model, and that's how we work with people, on a joint venture basis. And we've done it, sometimes for the long term. We've spent 5 years building a group before. Sometimes we've done it really quickly. Like we worked with one company where they bought 28 companies in a 2-year period. So, I mean, that's unusual and quite prolific, but, that just shows you the scale of opportunities available to people.
So there's somebody I've had several conversations with over the years that I think I first spoke to, must have been about 2017. So interested in growing through acquisition, but just felt the timing wasn't right. So sort of put it off for 12 months. Then COVID sort of came along and again, sort of needed to put it off a little bit. And then I think by about 2023, they sort of realized the margins had really shrunk since COVID. The world had become a tighter place. The business had had a bit of a knock on. So again, timing didn't feel like was right because again, that entrepreneur mindset sometimes goes back to need to make this perfect before I do sort of anything else. And then last year, they sort of realised with all the changes with income tax that each probably member of staff now costs an extra £1,000. So again, that hits the margins more. So it's finally decided that maybe I need to grow through acquisition. And to be fair, it's looking quite positive with where we're heading with that. When you've got somebody like that, because there'll be people listening that might be thinking, well, maybe I need to wait a couple more years, maybe I need to see what happens with the government, especially in the UK, or the tariffs in America, or whatever it might be. There's always a reason that somebody might think, well, let's wait another couple of years. What would you say to those sorts of individuals?
Yeah, so I would say that the opportunity is absolutely now. The wave is already happening, and it's just like anything in life. If you want a different result, then you've got to change. So waiting for something to happen, it means that potentially you're missing out on the opportunity. And I would say that the best deals are going to go to people who act now. Maybe by 2027, many baby boomer-owned businesses will have already gone, or certainly the best ones will have been bought up. And it's, to use a different analogy, if you want to get fit and healthy and you want to lose some weight and you want to go on a diet, it's always dead easy to say, oh, I'll start on Monday, I'll start next week, or, I won't sign up to the gym membership for another month or so. Well, until you do all of those things, you're not going to get fit and healthy. So why wait? For me, the people that are the most successful in this space are the people that take action. They don't let the grass grow beneath their feet. They're quick to act, because they see that opportunity now. And it doesn't matter whether we're in, a really peak market or, the doldrums of the economy. I always look at things with optimism that, we just have to figure out, just because things might be tough at the moment, well, what's the opportunity? Well, the opportunity for me is that it's tougher for business owners to run a business with increasing regulation, increasing taxes in many of the countries in which we do deals, and that's going to grate on a business owner. Well, rather than them work through all of those challenges and continue to have that stress and pressure, we're here, we're ready to take on that stress and pressure and own that business and consolidate, and give them the exit so that they can go off and enjoy life or do whatever's next for them. And there'll be a lot of people feeling, the stress and pressure of, running an SME in 2025 is it's always been tough, but it's certainly a lot tougher than maybe 25 years ago when I first sort of got into the world of work, and how things have got more challenging for people.
Okay, so before we wrap up, I think just going back to an earlier question, obviously talked about sectors that are good industries to be within. Based on where the future is going, so obviously there's lots of change, there's AI coming in, revolutionizing a lot of businesses. Are there sectors that you believe that, one, these methods maybe don't work, or two, you just personally wouldn't be interested in getting involved because of how the industry could change?
Yeah, so we have a very specific model in that, it's a leveraged buyout structure, and that generally works well in consistently profitable, I almost call them boring businesses. Something that's on a fast growth spurt is difficult because it's going to probably require capital to continue that growth. So we try to stay away from anything that's, capital intensive, got big capex requirements, because you're using the cash flow of these businesses to essentially fund the transaction. So if you've also then got to do lots and lots of investment in the business to either maintain it or grow it, then it's going to be challenging to work in that type of environment. So one of the things that we do is we actually, teach people how to find the right industry, the right business, and how to structure the deals that make sense. So, we've spoken about, B2B service industries is pretty much like our bread and butter. They're fairly straightforward businesses to understand. They're straightforward businesses to get these sorts of deals structured. And generally what we're doing is, it's not theory. This is based on the 100+ transactions that we've done. When we're working with people, we're sharing our knowledge, we're sharing our process, so that they can go out and execute based on experience rather than some sort of theory. It amazes me. You can go and get a business degree and pay, tens of thousands of pounds to a university to get trained by somebody that's never run a business before. And I'm a strong believer that if you want to do something in life and you don't know how to do it, well, it's about going to find somebody that has done it and either partner with them, work with them, extract the knowledge from them, so that you can, basically have a greater chance of success than trying to go it alone.
Okay, so just to wrap up then, so how can buy, build, sell help? If somebody's thinking, I want to get in before it's too late, what's their next step from here?
Yeah, so we have a program where we basically work with joint venture partners, where we will basically share our process. So we basically, share how to go out and find a deal, how to do it, how to get it funded, how to make it all work. And we have a whole team here that essentially supports that process. So, if we're working with somebody on a joint venture basis, then we'll work one-on-one with them to make a deal happen. So we'll attend meetings, we'll get involved in negotiations, we'll pitch offers and financial proposals. When we get the deal agreed, we'll do all the legal work, the due diligence work, the financial modelling. We'll go out and raise the money. And then we work with the joint venture partner on a sort of operational basis. So they typically tend to oversee the business, whereas we tend to then just carry on with the M&A activity to build that business further through future acquisitions. So yeah, if anyone's interested to have a conversation about joint ventures, do get in touch. Always open to talking to like-minded individuals that are ambitious and want to create wealth for themselves and their family, and have some fun along the way.
Okay, perfect.
Can I ask you a favour? If you like this content, then please do subscribe to the channel to receive more content like this as we upload it. It helps our channel and shares the message with like-minded deal makers. It also helps me to connect with our audience and bring you more content that you can watch.